Okay, welcome back, viewers. So what we're going to do now is go through whether these items are debits or credits in the trial balance. So this is what a trial balance looks like. These items here would be the individual accounts, the T accounts that are in your accounting system. And here you'd find, in the trial balance, you'll find a list of all the balances. So what I'd like you to do now as an exercise is to stop the video and tick here whether you think whether they're debits or credits, each of these items. So what you can do is go back and look on the last slide. So whether they're debits, assets, credits. Assets would be debits, expenses will be debits, credits, liabilities, etc., etc. And then just tick here whether you think which ones are which. So now our purchases, that's an expense, so we know that's a debit. Sales, that's an income, so that'll be a credit. Trade receivables, that's a asset, so that'll be a debit. Trade payables, that's a liability, that'll be credit. Insurance, that's an expense, that'll be a debit. Rent expense, that'll be a debit. Wages, that's an expense, that'll be a debit. Now bank, that could be debit or credit depending on whether you've got money in the bank or not, but we're going to assume here that we have, so that will be a debit. If it was we didn't have money and it was an overdraft, then it will be a credit, obviously, because an overdraft is a liability, so that's why it would be on the credit side. Equipment, that's an asset, so that will be a debit. Delivery vans, that's an asset, that will be a debit. Capital, that's a kind of liability to the owner, so that will be a credit. So these are the items, these are the individual balances in the trial balance, and they all balance at the bottom because they add up to 173,400 both columns. So yeah, that's what a trial balance should do. It should balance, and these are the list of all the items in the accounting system and their values. So financial statements, profit and loss account equals income minus expenses. We'll give the profit and loss account. Statement of financial position or balance sheet is assets minus liabilities equals capital. Terminology. So the terminology has recently changed. These are the old names for these items, but as most countries have adopted international accounting standards, people can compare them, more comparable. So it makes it more comparable. All the international accounting names, they can compare them from country to country if they use the same standards and they're the same names. So that's why we have adopted them. Other countries have adopted them too. So the UK name for stock is now inventory. What is stock? Stock is goods held for sale. For example, a t-shirt in a clothing store or trousers in a clothing store. So whatever you hold for stock. So if you sold cars, then the cars will be your stock. So whatever your trade is in, the goods that you sell, that will be your stock or your inventory. We still use these names as well, but for publishing accounts purposes, obviously these left ones are more acceptable. These ones are still acceptable for smaller companies, but larger companies would tend to use the left hand side names. A supplier that owes you money, that is a creditor. That is someone who's referred to as creditor in the past, is now a trade payable. A customer that owes you money, that would have been referred to as a debtor in the past, is now called a trade receivable. Income minus expenses, that will give you a profit or loss, hence profit and loss account. It's now called an income statement. I don't feel that income statement necessarily describes the purpose of this statement as a profit and loss account does. So I think the middle name is a lot better, but who am I to say? Assets minus liabilities, that will give you equity or shareholders funds. That's called a balance sheet. In the past, now it's called a statement of financial position. Okay, thank you for listening. I hope you enjoyed the lesson. I'll see you in the next lesson.